Hello, and welcome to the Sound of Economics podcast from Bruegel, the Brussels-based economic policy think tank. Why is the European Union still worried about Italy's new government?
You know, there is a discontinuity eventually, and so anytime there is a discontinuity, it's clear that the market tries to give a probability to new events, and what happens in the market is just the discounted expected value of future events with a certain probability. In this moment, there are some things that are under discussion within the governments, also within the governments and the European Commission, related to the topics of the immigrants, related to the topics of the fiscal discipline. Actually, the Minister of Finance has been very clear that he will respect the rules and he will take care about what are the requests that come from Brussels and from the indication that also arrives in terms of, possibility and space space in the fiscal policy that the country will have. In any case, the market is quoting this uncertainty. We have several indicators about redenomination risk, the quantum basis, the ISDA basis, the CAC basis that are growing. It's not only a question of the nominal spread actually, but I believe that and I hope also that soon the debate will be better focused on these critical topics that I mentioned before, and so the situation will be, I hope, more clear, and at a certain point in time we finish in a safe and sound situation. Even if in terms of indicators, data, this moment actually is not much stable, in my opinion, and resilient with respect to the period where we have the peak of the crisis at the end of 2011 and the beginning of 2012, because there are several situations that are not fixed. The Eurozone is still moving towards a policy in which risk reduction is a must, but unfortunately the kind of policy that has been introduced moves also towards risk segregation, and if you have one currency area, sooner or later you have to face the problem of the risk sharing.
Particularly, what do you think explains this tension in between Italy and the European institutions, and how realistic is this Italy exit that we hear a lot about in the media?
Actually, I believe that the Italy exit arrived at this point is not an option. For several reasons. A couple of years ago I wrote a research with the research department of Mediobanca, where I explained also why, by offering some figures on that, and by focusing on one point that one may be of the point that you can estimate in terms of the pros and cons of an Italy exit, and I explained quite clear by analyzing the problem and the opportunities of the usage of the Lex Monete on the public debt that arrived at this stage. It was 2 years ago, so the situation now is worse. There was not an advantage of applying the Lex Monete to the public debt, because as you know, it is clear that an Italy exit would represent, first thing, the possibility for the country to use the Lex Monete to convert asset and liabilities from euro in a different currency that, according to the present value of the CDS and loss given default, should be devaluated, at least at the beginning, with respect to the previous euro. And so I explained that this option actually was no longer present, because since more than half of the public debt is now assisted by collective action clauses that actually reduce the possibility and the capability of redenominating the debt in a different currency, it is clear that the advantage is no longer present as maybe it was in year 2010 or year 2009 or also 2011, so before that the ESM agreement inserted this clause in the European regulation. The point is also difficult to face. So this aspect was an aspect where you can make some quantification, without incredible conjectures. Since I am a mathematician, so I don't like too many conjectures. The point, in my opinion, is also difficult to manage because we have also to remember that we have plenty of information technology infrastructure that should have to be implemented if we want, if a country want to leave the Eurozone, because let's just speak about the Target 2 payment system or the way in which the banking system is, interconnected with the other institution, not only within Europe but also outside Europe. So there are plenty of things that has to be implemented, realized, that would require not, 2 years of working, 3 years of working, who knows? So it's not only a question, to print notes. It's not that the case. As well, I believe that we should work on the Eurozone architecture in order to complete the European Union, because in this moment we have this incomplete architecture, as I give this name in a book on the Eurozone architecture that I published a couple of years ago, because it is clear that you cannot have monetary union without banking union, without fiscal union, without a federal budget, without trying to push the euro currency closer to the US dollar currency. And it is a complex process because it will require years in order to arrive there. And so, for this reason, I believe that we have to concentrate our efforts in order to find some ways not to confirm the present status quo that actually does not work, and to move towards this direction by finding some, solution and by using the present pillars of the architecture. For example, the ESM or the ECB or, all these subjects, the European authority that we have created, the way in which the rules are written, the European directive. Just to tell you something, when the euro was born in 1999, I remember working on the risk directives, the directives on banks, on insurance companies and mutual funds. And one critical aspect in this directive was to give no risk to govies, whatever member country was. Why this? Because we have to give to financial markets the idea that the European Union was a normal currency area where the risk was substantially shared. And it worked. It worked. In less than 3 years, financial institutions plays with convergence rate. And instead of having 18 interest rate term structures, we arrived to have just one, the German one. I called in my book the Germanization of the interest rate term structure. And at the same time, obviously, core countries get an advantage for having peripheral countries inside, what I call the Italianization of the exchange rate, that obviously allow Germany in its mercantilistic, economic policy. So we have to move on some, general and basis principles, and try to re-implement the architecture. We have a great opportunity in this year and in the next year, since the agreement, the fiscal compact, is expired last year, and so we have to work on this. In fact, they are working. The Euro bureaucracy is working on this, and also we have the ESM treaty that is under discussion. And then we have the banking union, that is an important stuff that is, again, discussion. We have the rules on the MREL, TILAC. There is plenty of financial stuff that has to be designed. In my opinion, these stuff and these rules are the ones that can move to a more resilient Eurozone, if we take the right decision, that has to have, in my opinion, as a polar star, the risk sharing, not the debt sharing. Otherwise, it is clear that we will increase the endogenous risk of the Eurozone architecture, and obviously if you increase the risk, it's just if you press a glass. If you increase the pressure, you don't see the glass deformation because it's glass, but sooner or later the glass would break up.